money are people making selling their properties right now, and why is this profit rate so high?
Yeah, thanks, Amelia. So looking at sales from the December quarter, we found that there was this record median nominal gain. So basically the middle result of people selling their homes, pocketing $306,000. And not only that, but the rate of people making profits from resale of residential real estate was at a pretty high level, sitting at about 94.8%. The reasons are twofold. Firstly, property values have continued to grow strongly despite rising interest rates over time and various affordability challenges. We've seen housing values grow around 40% since the onset of COVID, as much as 70% in Adelaide, Brisbane, and Perth, almost 80%. That and Australians are generally empowered to hold their properties for a pretty long time. So the typical hold period of these properties or amount of time before they were sold again was 9 years. So that helps people escape the short-term fluctuations of the property market and benefit from long-term capital gain.
So, Eliza, your data does show that some people are making a loss or not much profit when they resell their homes. Where is this actually happening, and what sorts of properties?
Yeah, great question. So if we think about the 5% of homes that did not make a profit, roughly 5,000 resales in the December quarter, a lot of them were concentrated, about a fifth in fact, in the unit markets of Greater Parramatta in Sydney, Ryde in Sydney, and Inner Melbourne. The Inner Melbourne SA4 region actually had a loss-making resales rate of units of 32%, so about a third of unit sellers making a loss. The type of stock that we're talking about is a lot of the high-density investor-grade stock that was delivered in the 2010s. So I think when people think of making a loss from resale, they might be thinking of a first home buyer who's struggling with a mortgage and has to sell their property off quite quickly. In actual fact, most of it would be investors who have just been waiting a really long time for their property to go up in value, and it just hasn't happened.
And Eliza, we've heard a lot about the rate cliff. That's where people come off fixed rate mortgages and they hit the higher interest rates. Do we have any evidence in your data of people panic selling as they hit this cliff?
Yeah, so I think there is actually. We've done some analysis of short-term resales and found that a fair chunk of loss-making sales in particular had a hold period of just 2 to 4 years. And if we think 2 to 4 years ago, that was when the RBA was reducing the cash rate to record lows, mortgage rates were hitting record lows, and there was a big surge in short-term fixed rate lending. So what's happened is that as those short-term fixed periods are expiring, continue to expire, there does seem to be a little bit of an uplift in short-term resales. One thing I would say, though, is that the amount of loss within those short-term resales, say the 2 to 4 year hold period, was sitting at about 7%. Higher than the national average of about 5%, but still not very high, and sort of contained to the outer mortgage belt areas of Melbourne in particular, where property prices just haven't gone up as much. So for most short-term resellers, they've been saved by property values continuing to rise strongly in other parts of the country.